Hi there, thanks for tuning in. I'm Josh Myers, and this is the Trader's Drawing Board.
This video is brought to you by Cannon Trading, the futures traders' destination since 1988.
Okay traders, we're going to get right down to it in this drawing board video. So our topic of conversation for the day is how big am I really trading when I'm trading in the futures market, or how much leverage is being applied, if you will. So we're going to look at the contract value, also known as the notional value of the contract. And for today's example, we're going to be utilizing the E-mini S&P 500 futures contract, which is based off the value of the S&P 500 index. The instrument symbol for the E-mini S&P 500 is ES. Then we're also going to be looking at the micro S&P 500, which is MES, which trades at 1/10 the size of the ES. So let's get started. Determining the contract or notional value of a futures instrument is as simple as knowing the contract unit and multiplier of that specific instrument. So in this example, we're going to take a look at the ES, which is the E-mini S&P 500 futures. The contract multiplier for the ES is $50 times the value of the S&P 500 index. So it's $50 times the value of the S&P 500 index. If you Google SPX, that is the symbol for the S&P 500 index. So Google SPX is going to bring up a value. If you take that value times 50, you will have the notional value of an E-mini S&P 500 futures contract. Calculating the MES is as easy as calculating the ES. It's simply a different multiplier. So if the ES is calculated using $50 times the value of the S&P 500 index, the MES is calculated using $5. So it's just a smaller contract, basically, or a smaller size contract. If you look at the two value multipliers, you can see, as we talked about before, ES trades at $50 per index point, whereas MES trades at $5 per index point. It is 1/10. The MES is 1/10 the size of the ES. Okay, now we're going to look at an example of the notional value of the ES contract. So for this slide, I'm going to do my best weatherman impression. I have pulled up a chart from Google of the SPX index value. It's 4,538.43. I rounded that up for the example to 4,538.5. We take that number times 50. Remember, we take the value of the index times 50 for the ES. So we take that times 50 to arrive at a notional value of $226,925 currently. Okay, so that's the current value of the ES contract, the current notional value today as of close. That will change. It changes all the time. Okay, just a quick example of the MES to further hammer into your mind the idea that the micro is 1/10 the size of the mini. So we have an MES notional value example. I used the same SPX chart from earlier. The only difference is the contract multiplier is now 5 instead of $50. Okay, so $5 is 10% of $50, 1/10 the size. So the notional value of an MES contract is $22,692.50 per contract right now. Like I said, it changes all the time. It's probably different now, although the market's closed, but I'm sure if they opened it back up, it would be different. All right, it's always moving. So I'm going to now talk a little bit about how the MES and the ES can be used depending on volume and volatility within the market. The markets are a dynamic atmosphere, or ever-changing, so there's different periods and different levels of volume and volatility every single day. So what notional value allows us to do is to keep a good eye on exactly how much exposure we have within the financial markets. So a great example of this is an ES trader, someone who trades the S&P 500 futures. We'll say that he experiences or notices a very turbulent or volatile day in the market. He could decide to size down to the micro contracts with a lower notional value. Let's say he trades 5 micro contracts instead of 1 mini contract. So he would be cutting the notional value of the mini contract in half by trading 5 micros. There are pros and cons to this. So it is proportionately it is more expensive commission-wise due to economies of scale and things like that. But perhaps that trader feels as if it's a better idea to size down on a very volatile day rather than taking the risk and trading a size that he is not comfortable with. So that's a great example of how a person can manage risk with the notional value of a futures contract. With all that said, that's going to wrap it up for this segment on the trader's drawing board. Thanks so much for tuning in. Hopefully by now you have a good understanding of how to calculate the notional value of a futures contract. It's really quite simple when you understand the formula, and it will allow you to have a better understanding of just how big you're trading when you trade derivatives or when you trade futures. If there's something you didn't understand or you still have more questions, we'd love to talk to you. Reach out to me or one of the other fine brokers here at Cannon Trading. That's www.cannontrading.com. If you enjoyed the video, please like, comment, and subscribe. We love to engage with our followers and viewers, and also it gives us great feedback on the types of videos and the types of information that traders and other people who are looking to educate themselves are looking for. So that concludes this segment on the trader's drawing board. Thanks so much for tuning in, and as always, we're looking forward to the future. Take care.